Welcome back to Boni's Life, where we decode the noise and find the signal in the crypto markets. I'm Boni, and if you're holding crypto right now, you are probably feeling that knot in your stomach. The market is giving us a masterclass in volatility, and this week is shaping up to be the most critical week of 2026 so far. We have a massive collision of macroeconomic forces, geopolitical tension, and shifting regulatory landscapes. So, grab your coffee or maybe something stronger because we have a lot to unpack. Let's start by looking at the tape. The global cryptocurrency market cap is sitting at $2.51 trillion, up about 1% in the last 24 hours. Bitcoin is currently trading around $71,490, up 6.4% over the past week. Ethereum is outperforming slightly, sitting at $2,107, up 8.2% for the week. Solana is holding strong at $88, and XRP is hovering around $1.41. But don't let these green numbers fool you into a false sense of security. The Fear and Greed Index is currently at 14, which is extreme fear. Just a few days ago, it hit 8. The last time we saw fear levels that high, Bitcoin was trading at $62,400. The market is terrified, and frankly, it has reasons to be. We are currently in a high-stakes environment. The geopolitical situation in the Middle East, specifically the US-Israel-Iran conflict, is now in its third week. This has pushed WTI crude oil prices above $100 a barrel, adding a massive risk premium to global markets. When oil spikes, inflation fears reignite, and when inflation fears reignite, the Federal Reserve gets nervous. And that brings us to the elephant in the room. The FOMC meeting this Wednesday, March 18th. The market is currently pricing in a 92% probability that the Fed will hold rates steady at 3.50% to 3.75%. But the rate decision isn't what we care about. What we care about is the dot plot and Jerome Powell's press conference at 2:30 p.m. Eastern. The dot plot will show us where Fed officials expect rates to be in the future. Goldman Sachs has already pushed their expectation for the next rate cut back to September 2026, and the futures market is only pricing in one cut for the entire year. If Powell comes out hawkish, citing the recent oil spike and sticky inflation, risk assets, including crypto, are going to take a hit. Historically, Bitcoin has dropped after 7 of the last 8 FOMC meetings. This is not the time to be playing with high leverage, but it's not all doom and gloom. While the macro picture looks like a storm is brewing, the institutional adoption of crypto is accelerating at a pace we've never seen before. Let's talk about MicroStrategy. Michael Saylor and his team just acquired another 17,994 Bitcoin for roughly $1.28 billion at an average price of $70,946. They now hold over 738,000 Bitcoin. Saylor recently noted that Bitcoin purchases don't lead to immediate price increases, stating there's always a delay. But this level of conviction from institutional players provides a massive floor for the market. And it's not just MicroStrategy. BlackRock just launched its iShares staked Ethereum Trust ETF, ticker ETHP. This is huge. It's their first spot Ethereum ETF with integrated staking rewards, offering a yield of around 3%. It debuted with over $100 million in assets under management and saw $16 million in trading volume on day one. This fundamentally changes the narrative for Ethereum, turning it into a yield-bearing institutional asset. We're also seeing a reversal in Bitcoin ETF flows. After 2 weeks of outflows, we've just seen 3 consecutive days of positive inflows, totaling $450 million, led by BlackRock's IBIT. The smart money is buying the dip. Now, let's shift our focus to Washington, D.C., because the regulatory landscape is shifting beneath our feet. Token 2049 in Dubai has been postponed to 2027 due to the geopolitical tensions I mentioned earlier. This has made the DC Blockchain Summit, happening this Tuesday and Wednesday, the absolute center of gravity for the crypto industry. This isn't a conference for laser shows and parties. This is where the rules of the road for the next bull market are being written. The big focus at the summit is the Clarity Act, which aims to define most blockchain-native tokens as digital commodities rather than securities. We just saw a historic memorandum of understanding signed between the SEC and the CFTC, which is a massive step toward regulatory harmony. Interestingly, this MOU classifies XRP as a digital commodity. This is a huge win for Ripple and the broader crypto ecosystem. We're moving from an era of enforcement by ambiguity to actual legislative clarity. If the Clarity Act gains momentum, it opens the floodgates for institutional capital that has been sitting on the sidelines because banks can't touch crypto until the rules are written in ink. Speaking of Ethereum, Vitalik Buterin just released a new mandate for the Ethereum Foundation. He stated that Ethereum should become a technological safe haven, doubling down on decentralization, verifiability, and privacy. This is a strong philosophical pivot, ensuring that Ethereum remains resilient against censorship and centralized control. Let's dive into the technical analysis and look at what the charts are telling us. Bitcoin recently swept into an upper liquidity pocket near $73,000 and faced a sharp rejection around $74,000. We are currently consolidating near the $71,000 level. The 4-hour RSI is neutral at 51.94, and we are trading above the 50 EMA. However, the weekly RSI is at 29, which is in oversold territory. This divergence suggests that while short-term momentum is neutral, the longer-term structure is primed for a reversal. The $73,000 to $75,000 range is a massive resistance barrier. We need a significant catalyst to break through that wall. On the downside, we have strong support between $68,000 and $70,000. If that breaks, we could see a retest of the $62,400 level we hit last week. For Ethereum, the critical level to watch is $2,120. We are currently trading just below that. If bulls can regain control above $2,120, we could see a short squeeze push the price above $2,150, especially given that funding rates are currently negative, indicating that shorts are piling up. We also need to keep an eye on the altcoin season index, which is currently sitting at 45. This means we are still firmly in Bitcoin season. Only 36% of the top 100 altcoins have outperformed Bitcoin over the last 90 days. Until we see that index push above 75, Bitcoin will continue to dictate the direction of the broader market. So, how do we trade this market? What are the strategies for the coming week? First and foremost, capital preservation is your primary goal this week. With the FOMC meeting on Wednesday and the Bank of Japan rate decision on Thursday, volatility is guaranteed. The Bank of Japan is a wild card here. Japan's CPI is running hot at 3.7%, and if they surprise the market with a rate hike, it will trigger a surge in the yen, an unwind of carry trades, and a global risk-off event that will hit crypto hard. Strategy number 1. Reduce your leverage. This is not the week to be trading with 50 times leverage. The event risk is simply too high. If you are in leverage positions, consider taking profits or tightening your stop losses before Wednesday afternoon. Strategy number 2. Play the ranges. For Bitcoin, look to accumulate near the $68,000 to $70,000 support zone. If we see a spike up to the $73,000 to $75,000 resistance level on the back of a dovish Fed, that is a prime area to take profits or open short positions, as that resistance is unlikely to break on the first attempt. Strategy number 3. Watch the Ethereum short squeeze. Keep a close eye on the $2,120 level for ETH. If we break and hold above that level, the negative funding rates suggest a squeeze is imminent. This could be a high probability long setup targeting the $2,200 range. Strategy number 4. Be patient with altcoins. We are not in altcoin season yet. While there are specific narratives playing out, like the Polkadot tokenomic restructuring that just activated, the broader altcoin market will likely bleed against Bitcoin if volatility spikes. Focus your capital on the majors, Bitcoin, Ethereum, and perhaps Solana, until the altcoin season index shows a clear rotation. To summarize, we are facing a week of extreme macro and geopolitical risk, balanced by incredibly strong institutional fundamentals. The smart money is accumulating, the regulatory clouds are beginning to part, but the short-term turbulence could be severe. Stay disciplined, manage your risk, and don't let the noise shake you out of your long-term positions. If you found this analysis valuable, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss an update. I want to hear from you in the comments. Are you buying this dip or are you waiting for the Fed's decision? Let me know. Until next time, trade smart, stay safe, and I'll see you in the next episode of Boni's Life.